Welcome to everyone tuning in. Thank you for joining us today. My name is Ryland Moore. I'm the Managing Principal in Business Development at Arnerich Massena, a Portland-based investment advisory firm, bringing our unique and disciplined process to private clients, nonprofit endowments, and foundations. Today, we're really fortunate to have our guest, Erik Selden, Senior Vice President and Manager of Business Banking at First Citizens Bank. Erik knows the real estate market inside and out, so I'm excited to dig in and ask him about what things look like with some of the volatility around interest rates, yields, and inflation. Erik, thank you so much for joining us.
Hey, thanks a lot for having me. Happy to be here.
Great. Well, let's jump right in. I feel like there's a lot going on with everything in the market. Interest rates seem to be just going sky high right now. The investment markets are reeling. It's a really interesting time. So can you start by giving us just a quick bit of your background on you and your areas of expertise and experience?
Sure, yeah, no, definitely. So I've been in the market in business and commercial banking for a little over 17 years now, primarily focused on financing owner-occupied investment real estate and also doing some professional financing in the areas of mergers and acquisitions as well. So seen a lot. Probably at this point in my life, I've financed over $250 million in real estate over that time span. And so seen a lot in the ups and downs. And, fortunately, I've lived through one recession. So I've got a little bit of experience in a rising rate environment, but it's definitely a new age. And we're dealing with a lot of new interesting things right now. So,
Oh, for sure.
yeah.
Well, let's stay on that topic for a little bit. So could you, from a big picture perspective, can you give us some understanding of how interest rates affect the real estate market in theory?
Yeah, no, definitely. Rates have a tremendous impact from an investment standpoint. When you think about money, you're always looking at, okay, am I buying something with cash or am I going to invest with leverage? And most of us, unfortunately, don't have enough cash to go out and purchase real estate, on its own without attending and getting a bank involved. And so with that, you're looking at your buying power, and that's often impacted by how the interest rates are going up or if they're coming down. So in a rising rate environment like we're currently seeing, our buying power is starting to shrink, and that ultimately is probably going to lead to either some reduced values on properties or either some reduced returns. So one of those two things has to give when we're dealing with higher interest rates.
So you're seeing, are you starting to see that compression yet in price, or is that something that is eventually going to hit the market here from the commercial side? And is there any leader, whether you see it on the residential side versus the commercial, or maybe some sectors of the commercial real estate market?
Well, I think you really have to look at it from an investment standpoint. What are you looking to get out of it from a return? And that really makes a big difference. The rates have increased significantly. We're up, over 1% since the beginning of the year when we look at the 10-year Treasury. And that's the most common benchmark that banks use for interest rates. And so over the last, 30, 60 days, we've seen, 40 basis point increase in interest rates. So we haven't got to the point where those interest rates are, dramatically impacting the price on real estate right now, but it is definitely a leading indicator that we are going to see some compression. When you think about your return that you're going to get, for example, let's say you want to buy an apartment building, and that apartment building produces $50,000 of cash flow after all the operating expenses have been taken care of. So as an investor, you say, okay, that property might be worth $1 million, and you're going to get a $50,000 return in your pocket. Now, if you're going to get lending on it, you have to factor in what am I actually going to get from free cash flow after I pay my mortgage payment. So right now, let's just say the mortgage is $40,000. You might get $10,000 of free cash flow, but as those rates continue to climb, then that mortgage payment is going to get higher. And pretty soon we're going to get to a point where that mortgage payment is going to exceed the income that you're able to produce with that property. And that's ultimately going to create one of two things. Either rents are going to have to go up in order to maintain that return that you're getting, or the price is going to have to come down in order for your mortgage payment to shrink in order for an investor to feel that that's a good asset to purchase. So right now we're still in the very early phase because rates have gone up so quickly. I don't think the market is yet to adjust, but we could see some of that happening in the near future. I definitely would think over the next 12 months, especially with the Fed increases coming.
Yeah, that's a really great point, I think, Eric. I mean, when we think about things from an investment perspective, we're looking at what are the alternatives? What is the opportunity cost? So if you're going into real estate and you're only able to get, and your cap rates that you're able to get for the return on that investment is shrinking, then is there another alternative to place those dollars into some other asset, not necessarily real estate? Is there another place to go where you do get better returns, at least in the near term? So yeah, really important. Well, so far, real estate investors, what are your thoughts on any actions that they should be considering right now? And, should they be thinking about moving on, or is there potentially some buying opportunity coming up too with some of this?
I definitely think there's some buying opportunity. Right now there's definitely been a shortage of available properties for sale in the market, but I think as savvy investors continue to look for opportunities, you're also looking at your savvy real estate holders that are looking to exit their property at the highest potential value. And so for that reason, I think we're probably going to see a few more properties start to come online for those that are looking to sell and get the most return right now, as those rates continue to go up. And so for investors that are looking to make some decisions, I still think there's some great opportunity to get some value add properties, and also to pick up some properties, that you may have been thinking, I want to hold this for a long time. And my approach when I'm talking with my customers is really, what's your long-term goal with this? Because all of our financing is generally, focused on the long-term aspects. And so I think there's still some great opportunities for people to invest in real estate. For those that don't have the same, risk appetite, maybe looking for a deal, maybe sit on the sidelines, but you are going to run the risk of cost from a, lending standpoint. That interest may not make it balance out for you to wait, because you're probably going to pay a higher interest rate to get that property, where rates are still low when we look at the historic average of rates. Has still been above 7%. Right now, you can still find 5 and 10 year money between 3 and 4.5%. So still great opportunity to get into the market if you can find a property that fits your needs.
Excellent. Well, and you don't just do real estate. You guys are really a one-stop shop from a business banking solution. What are some of the other things that your clients are asking you about right now, with everything going on with the rising interest rates and inflation and everything else? What are some of those other conversations you're having with those clients? Yeah,
we're definitely having a lot of business valuation, discussions, and a lot of discussions regarding just the balance sheet of our customers in general. We try to stay in front of them to really get a projection of what they're looking to accomplish, in the market, and then how we can help them, adjust their balance sheet or put things in place to make sure that they have the necessary funding that they need to get there. And so, most recently, clients have really been looking at business acquisitions. We're still in that era of boomers who are leaving their business and are looking to transition. And so we're doing a lot of financing for acquisitions right now. And those can be tough. I'm not in the business of valuing businesses myself, mainly just looking at cash flow and risk. And so we're taking a lot of time to sit down and review a lot of financials right now with clients to make sure that they're getting into a good business, that's going to be good for a long time.
Excellent. Well, Eric, really appreciate your insights into this subject. I've valued our relationship over the years and being able to lean on you. And I've got questions for my clients, or some other advisor in our firm has questions for their clients. So really appreciate your insight and expertise. What's the best way for people to find you?
Yeah, LinkedIn is always a great way to get a hold of me. So you can look me up at Erik Selden, and it's ERIK, S like Sam, ELDEN on LinkedIn. You can also find me on social media at Selden Smart. or also my website, seldensmart.com.
Excellent. Well, thank you so much, Erik. Really appreciate the time. Thanks for dropping in. For those listening, you can visit our website at arnerichmassena.com and check out our blog for more interesting podcasts and articles on relevant topics. Erik, really appreciate you being here today. And thanks to our audience for joining in as well. All right. Have a wonderful week.
Thank you for listening to Arnerich Massena's podcast. Please see the podcast description for important copyright and disclaimer information.